in this course, along with the reentry stuff we're going to talk about. Scratching and reentering essentially becomes most of what we do. And it's one of the hardest things to master. The thing that will have the most impact on P&L, like I started with that heavy statement at the start of this chapter, managing winners, that is managing risk throughout a trade that actually works. Scratching and reentering are a really, really big deal. What kind of variables are involved in scratching a trade? We want to think about it in phases. There's the initial phase where we put risk on at the beginning before there's been much favorable excursion, and then there's that point afterwards. We want to think about it as a spectrum of willingness to scratch relative to known quote-unquote problems with the trade. A looming stop run behind where we got in, either macro or on the micro at the turn we selected. What does that mean? You should know. Rotations. We are getting short. Guess what? We're getting in short inside, not outside, right? There's potential for stop run through this level. That's a problem in our back right there. What about if we zoomed into the turn itself? Here's the rotation coming up in terms of bars, and it does something like this. And we're getting short on this turn. Guess what? This is vulnerable, right? All those highs there. It's not a great turn, right? It's a potential stop run area on a micro basis. So either one of those things, inside, not outside, which we also covered here. Compromised rhythm or DVA location. If you're taking a trade like the guy in the chat today who got short right here instead of right here, that's compromised rhythm. You need to be, if that thing all of a sudden goes whoop and there's a ton of buyers coming in or whatever, you're not hanging on to that trade, guys. Why would you hang on to that trade? You're compromised, so our willingness to scratch needs to be through the roof. What about DVA location? What about you're getting short some kind of little move, in one of these areas. Obviously, it would have worked right here or whatever, but you're getting short at a lower extreme, or you're getting long into the upper extreme of DVA, right? That's a compromised trade location with the DVA framework. Our job is to fade extremes or go with imbalance. If we are rotational and we push up to an upper extreme, that's not a place to be getting long. And if we do, and then there will be some situations where we do, just as we put all the pieces together, and then DVA, it's a loose framework, a signpost for us. We're not always going to have it. What I'm saying is if you're making that kind of compromise, which I'm saying we will, your willingness to scratch has to go up. If you got some kind of problem with order flow, perhaps you had a nice little short-term divergence, but you're into delta neutral against you. If all of a sudden you get a strong signal from delta neutral where they respond, remember the other day I was saying, hey, if I did get short there, I'm going to need to see 10K or delta neutral. Remember, it was a move that looked like this. Here's delta neutral. It came up just through it, and then there was the turn. And I was saying, if I'm going to hang on to this short during the early phase prior to favorable excursion, I'm going to need to see sellers take the baton and get us through delta neutral for me to continue to feel good about that trade. Otherwise, my willingness to scratch is higher because I have that problem potentially. I alluded to this a moment ago, mushy low speed, low energy turns for our entry, right? That would be one like this. Or it might just be really on um, the speed and energy side of things rather than an actual micro potential stop run area. And then, if applicable to you here, NADRO students know this. If you've got a really high quality narrative and things like that, we're going to be less likely to scratch. We teach that in that, even that standard intraday position trading kind of taught course. If you are compromised, if the narrative's not that good, the willingness to scratch needs to be there. In general, our scalping is not really relying on some narrative at its back. So, in general, the willingness to scratch is much higher in scalping than with NADRO. And now I'm telling you, even within the scalping world, guys, the willingness to scratch is a big deal that you need to be thinking about depending on, you can use those checklists, right? You could check the things that are in your favor. You could have a list of anti-check marks that are clearly against you. And depending on how many checks you have there, it affects your willingness to scratch. And you can come up with process and very specific ways of doing that. I'm not going to impose that on you. I'm handing you the keys to the kingdom to do this stuff, though, and giving you these ridiculously good ways of thinking about these problems. It sounds like I was stroking my own ego there. I believe in what I'm telling you is what I'm saying. Order flow during early phase of entry. There could be an undeniable shift and strength against you. And during the early phase, that could get us to scratch. Not taking sucker stops is another reason to scratch. It's anytime it goes hand in hand with some of the stuff we covered here, but what I'm saying is don't just allow a stop beyond an area that's maybe potential stop run area, all those kind of things. Don't allow yourself to be stopped at those areas. You'll see some examples of me doing that with what I'm going to show you in a little bit. But, if there's an area that's really vulnerable to a stop run and you happen to have gotten short, maybe it worked, maybe you scaled some off, doesn't really matter. The point is it's ripping and roaring back at it. Order flow's not looking good. Do not do not stop out up here. Get out now. Get long. Right? Don't just sit there and take that type of sucker loss. Scratch it. Get out. Reentries. I've often said I should write a book, and maybe I will one day, called The Art of the Reentry. Scalping, as we teach here, cannot survive, much less thrive, without reentries. Remember all the randomness we talked about? No matter how good your analysis is, things can change on a dime. And we're trading with tight stops. So we are subject, if we're trading on a lower time frame with tight stops, by definition, it takes less market participants to get to our stop, right? Less energy, easier to happen. Therefore, getting stopped out does not have the implications of putting a stop below, VWAP for the year on a daily bar chart or a weekly bar chart and saying, all right, if it comes down there, something's up. Or the 200 daily moving average, right? Like bull versus bear kind of big picture stuff. We're scalping ticks here in a little microcosm of algos and little degenerate scalpers like us. It's not significant that you get stopped out, both from a mental framework perspective and from a market dynamics perspective. So we have to master the art of the reentry. You could make a choice. You could trade with wider stops. that would defeat the purpose of many, 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 all of what I'm teaching you here in this course. So it's worth the endeavor of trading with tighter stops. We're not going to be trading with crazy stops. We're going to give trades a little room, but on a relatively speaking basis, it's tight. It's not rocket science, though. Reentries, that is. We're going to use the same principles we've covered in this course, paired with scratching concepts, to simply trigger back into trades that are still valid. Ultimately, it's the exits and especially scratching that creates reentries. And we have to balance how good the setup is with the need for clearing up the concern. Clearing up the concern in order that we're doing smart reentry type stuff. We're mastering the art of the reentry. For example, let's go back to my little drawing up here. I do this all the time, guys, all the time. I scratch out. The market does indeed run stops. One of two things tend to happen. It's a new day and we are ripping. It's a contextual shift, those kind of things. Or it's a stop run and there's the reentry. And a lot of times the price at which I got out and I got back in are roughly the same, right? And what did I do? I padded my MAE, MFE stat. Well, you could say, well, Merritt, you didn't end up any better there. You actually just had more commissions. Well, your logic is foolish. We don't know what's going to happen. Therefore, we all go into a risk off. We take risk off the table. You can't hurt me when I'm flat. And if it sets back up and we see a clearing up of the concern, in this case was a very vulnerable region to a stop run, we avoided taking heat on a position. We cost ourselves a commission, and we're still able to take advantage of the ultimate trade idea as long as we're mastering the art of the reentry. Some people get gun shy when they have to exit a trade. They're upset, they're frustrated. If that's you, you better pay attention to the last day when we talk about mental framework and psychology and stuff, because you're going to have to make some huge strides there in order to do this kind of trading. What example did I put for us here? We have an extreme fade with delta neutral, flaggy price action. Dang it, Merritt, is it bullish or bearish? Does it matter? Let's just draw it. We have an extreme fade with, here's delta 0, delta neutralization. With flaggy price action. So let's get a flag in here. We could be early on these setups as they take time to work eventually. We will find issues at times, concerns, and scratch, but our concerns don't become a reality. As long as the overall setup is holding true, as long as our risk plan allows for more reentries, we're free to engage and stay aggressive in doing so. So now I understand my own example. There's all this little movement that can occur and maybe some scary stuff with this or that. Vulnerability to stop run, we have a valid concern and we do some scratching. There's certainly probably the majority of sequences that I trade end up doing some things like this. So we could try the trade here and stop, maybe try it and scratch, and then we try it and then it works, right? So the point is that there are valid concerns along the way, even within a really nice setup like this. It's simplistic setup, but valid. As long as delta neutral holds, generally, it can get, a little bit below areas, not lines. As long as it's still from a lower extreme, right? As long as there's not major problems that prohibit our checklist and different ways of the way that we want to approach trading, as long as it's holding true, the idea, the setup, we can continue to take that. Not to mention the risk plan. If we take a couple shots and we lose our max loss per idea or setup, now we can't take it anymore. That's different. So the risk plan matters. But the other market generated information stuff, we scratch, we re-enter, and that's the game we're playing. I don't include commissions in my factoring. I just keep it simple, keep it gross. Commissions are going to be what they're going to be. Obviously, it'll show up in my results at the end of the week, month, year. And that's why another reason why trading prop is the only way to go. Like I said the other day, it's environment. And number two, it's cost structure. Let's take a look at some of my work. And it's not all picture perfect work. Y'all know where I stand on cherry picking perfect examples. I was literally just going through and pulling screenshots with fills and stuff that I knew were kind of very scalper oriented. What I want us to focus on here is going to be scratching and re-entering. That's really the focus. I do think that, you know, next we'll talk about taking profits and things like that. You'll see some good examples of that in my trading, but that's not the focus here. The focus is on scratching, entry timing, scratching, and re-entry. That's the focus. All right, so what happened here was a short and a re-entry, and I clearly saw something I didn't like. Something happened that caused me to take this really quick scale out, and then I scratched the rest of it just above where I got in. Then my concerns were alleviated. There was a new kind of shift in probably price and maybe delta, and I got back in. Took another quick scale, and then there was the end of the trade. How many students do I see, or desk traders even, where there's a beautiful attempt right off the and ultimately the high of day, and they don't have the second entry that I had there? It's a travesty. You cannot trade with scratching without the aggressive reentry component. They go hand in hand. All right, looks like a beautiful little flaggy pattern, right? I got in before the flag broke, so maybe there was something from an order flow perspective or speed of tape or something that happened right there that allowed me to get in just prior to the break. Sometimes I see flags very similar. If you take it like this and then you rotate that line, it's kind of like this, right? Right? Instead of the downward one. And so a lot of times I can tell at times where all of a sudden, aha, order flow shift, energy shift, speed of tape shift, that's where the action is, right? Now, does that mean that I'm 100% correct on those assessments? No, right? Probably 50-50, but my risk reward is good, so that's good. Check out this short. How atypical is this? Wow. Is that your rhythm read, Merritt? Boom, boom. Really? That's what you're saying? This was, I believe, more of a medium term break, and there was a big shift in the speed of the tape. Do you think that my stop was up here? No, not a chance. This would have been a momentum stop, right? I probably, once we started breaking through kind of that recent swing low, it was probably one of those things where that's all I was doing was just scalping the kind of the